Hey guys, Stock Saturday, and it's a fairly green week, fairly green start to the new year, to be honest. About 8,000 up for the week, so pretty happy with that. One or two changes to the portfolio, which I'll come back to shortly. But looking at some of the news, so TSMC have come out with their sort of guidance and results for the fourth quarter, and it's sort of fourth quarter looking pretty good, but guidance they have sort of said for the rest of the year they think it's going to be a bit of a rough year, which sort of doesn't bode all that well for semiconductor stocks. So yeah, they're sort of saying for the first quarter of 23 will be sort of 16.7 to 17.5 billion in revenue, which is lower than first quarter this year. So we could start getting some quarter on quarter declines compared to last year's quarters, where it's been sort of 40% up most of this year. Exchange rate basically the same, so it just means gross margin dropping down, operating margin dropping down, and yeah, they're sort of expecting this to filter down to the other sort of semiconductor stocks that use them, so AMD and Nvidia and potentially even Apple, I guess, having a bit of an effect on this. iPhone sales don't seem to be going all that well. So, yeah, that was sort of, I guess, somewhat expected. 2023's expected to be rough all round, so the chip side isn't sort of faring any better. But on the sort of stock side, I guess this seems to have largely been priced in. Stock sort of up from 80 at the beginning of the week to 86.80 now, and yeah, you can never tell whether people are sort of pricing this stuff in advance, but just have to roll with it and sort of look at the company long term, really. So in the sort of lows in October, November time, it was sort of 60, got down to pretty much 60, and everyone was bearish, but you have to look at sort of fundamentals long term, and I guess get ahead of Wall Street basically. The positivity around Chinese tech seems to be continuing. China sort of state-owned enterprises are taking small stake, very very small stakes, sort of 1% in subsidiaries of people like Alibaba and Tencent and one or two others. But they're taking essentially what we would call golden shares, which is sort of significant voting rights and sort of members on the board and that sort of thing, even though they're only sort of taking quarter of a percent of the overall company. But yeah, a lot of companies in the UK sort of have golden share type people where you own a small percent, but you have sort of a lot of control over the company, which is a sort of contrast to what they were doing earlier in the year, sort of keeping them at arm's length and cracking down on a lot of regulation. Chinese economy obviously has been slowing, so yeah, they're potentially wanting to sort of get on board, literally get a seat on the board on a lot of these companies and sort of push them forward. So yeah, that seems to have gone down rather well. Tencent sort of continuing to just sort of trickle up. It's not rocketing up, but yeah, over the last sort of few months, again, sort of it was in the low 200s, and yeah, now up to 371. So it's made Process carry on to be my largest position. Gone in the green now on it, so seems to be going pretty well. Not seen sort of huge amount of acquisition news for Tencent recently. Seem to have done a lot of that sort of earlier last year, whether they've sort of been restricted from doing so, but yeah, sort of selling off a few of their Chinese holdings, sort of people like Pinduoduo and Meituan. So I'm kind of happy of them sort of getting out of the more Chinese focused stuff and sort of buying Western firms. So yeah, that was pretty happy. Pretty happy long term with them. Alibaba and Baidu have sort of seen well, Alibaba in particular have seen sort of similar green with, again, China taking the golden shares in them. But Baidu have been sort of doing pretty well as on top of them. So, yeah, all the Chinese tech is doing rather good. The two that I hold in Interactive Brokers are up. And then, as I say, Process being the largest position in the invest account. Just looking at some of the news for the week, I don't normally focus on things like crude oil, but it was rather a change rather a change from expectations. The inventories were expected to be sort of down slightly, a couple of million barrels, and they were up 18 million barrels. So this is seen as sort of quite bearish, that demand isn't there to sort of shift these barrels, but oil still seems to be doing reasonably well. But yeah, that was noticeable. Same for sort of gasoline and anything related to oil, to be honest. But then Thursday we had the inflation numbers. So core CPI for December came in on expectations, which I guess you could see as good, could see it as bad. Ordinary CPI for December was expected to be flat, and that was negative 0.1%, so a very slight sort of low on there, but yeah, nothing too great, although it is negative, so it's dragging the yearly down from 7.1 to 6.5, and the core being as expectations, come down from 6% to 5.7%. Whether sort of Powell and the Fed were maybe hoping for more, we don't really know. Also on the sort of unemployment side, jobless claims were expected to rise slightly to 1.7 million people, and they've dropped to 1.63 million. So he's sort of putting a great deal of emphasis on the job market, and that's looking extremely strong. I think last week we had low, sort of unexpectedly low unemployment numbers, and now sort of unexpectedly low jobless claims. So I'm sort of seeing this as potential that maybe they might do 0.5% interest rate rise in a couple of weeks. Wouldn't go down particularly well, but yeah, at the very least, sort of 0.25%, and he'll be saying, you know, keep it up there for longer. So I didn't think this was particularly bullish. UK GDP, sort of month on month, was expected to be negative, and that was 0.1% positive. So year on year, 0.2%, very, very small, but positive. So possibly it's not officially not a recession because it's only the monthly, but potentially Q4 isn't negative. So that would mean no UK recession, even though the government have been saying we're in for a sort of a year or more of recession. So just coming back to the portfolio then, a lot of the stocks are sort of 4, 5 or 6% up. Seems to be quite a broad gain for most things. One or two sort of more flat, but very little in the way of sort of negative moves. Some things like Volkswagen and Porsche sort of rose up during the week and then tailed off. But yeah, most of them seem to be up sort of 4 or 5%. I did sell off Samsung, sort of as discussed. So that's at the bottom there now. But quite a few changes in the ISA. I moved some cash over to the ISA. Obviously got to fill it by April, so thought finally get some in there and sort of wait for any potential moves. But I sold off the ARC Genomics ETF, the sort of leverage shares, tracker basically of the ARC Genomics ETF. Just sort of thinking if we're in for a bit of a rough time, I'm sort of bullish on this in the very long term, but I don't really know how long term that really is. So sort of unsure over the industry. I thought I would just get out of that for now, maybe get back in later on, and it just sort of frees up some cash. And sort of being bearish, I have taken a few sort of risky 3x short bets. So Nasdaq sort of has risen quite a bit, sort of 15-20%, I think, off the bottom, sort of a few months ago, with a fairly sort of poor outlook. And yeah, I thought it was time maybe to go for a short. So I put £1,000 over the last few days into 3x short ETF. So a little bit of a hedge, I guess, if the market just continues rocketing up and up as it has, and we've potentially bottomed, then obviously the rest of my portfolio will do well, and I'll be happy to sort of see that £1,000 go down. I'll be well up overall. But yeah, this is, if we've got a little bit more downside coming, this would sort of provide a nice little bit of green in that time. I also did the FTSE 100, £1,000 into that, 3x short, which is the FTSE 100 nearing all-time highs, sort of very, very close to the sort of midday all-time high that we got a few years ago. And don't really see, I know obviously they're international and sort of foreign exchange rates play a part in it, but yeah, I just think looking through there, a lot of the companies seem to be fairly overvalued. I keep looking at AstraZeneca and people like them, sort of way above what I would expect to see them at. Obviously miners are doing okay. Financials, I could see in for a bit of trouble if we're sort of potentially in recession over the next year. So yeah, I just thought, again, a bit of a hedge, I would go for that. And as an individual stock, these sort of are a little bit less liquid than the ETF ones, but I sort of found one that seems to be okay, an Nvidia one, which Nvidia sort of has just confounded me. Seems to be going up against all of the negative news. I can't see them doing particularly well all year. Sort of fundamentally, products are sort of losing popularity with a lot of the gamers on their gaming side, even if people sort of accept that they have to buy them sometimes. And the sort of enterprise side, I guess, is doing okay. I looked at their sort of quarterly guidance, and sort of it's strong-ish reports, but yeah, not really to be sort of I think a forward PE of nearly 40 now. So pretty much higher than all of the FANG stocks, and yeah, seems to be sort of rather unjustified. They've been cancelling orders with TSMC and trying to sort of back out of orders. So yeah, they were getting a lot of their revenue from crypto miners, which again are not sort of doing all that well, and a lot of their side was things like mining Ethereum, which has now basically gone, with them transitioning to proof of stake. So just seemed to be an awful lot of headwinds for Nvidia, and people are still putting a 40 forward PE on it, or sort of trailing PE of 55, I think it was. So yeah, I did a £500 into 3x short Nvidia, which a little bet. Yeah, no real change in the IG account, or no buys and sells, that is. Atalaya Mining have sort of been rocketing up. It's gone well into the green again, with copper price sort of doing really, really well. And Hive blockchain, with the recent Bitcoin prices, has been rocketing up. Haven't seen the same for Silvergate Capital, so again, my selling out of Argo blockchain has not gone well at all. Should have waited and sort of, in hindsight, had a little bit more faith in them. But yeah, you live and learn. I would have sold out, as I said before, I would have sold out of them by now. If I had have held on to Argo, I wouldn't have been holding now. So yeah, it's a short-term bad trade, but long-term I'm still happy. So yeah, that's the portfolio for the week. Sort of, as I say, fairly green new year, but I'm still keeping quite a bit of cash on the side, anticipating sort of this may be being a bear market rally, and more downside to come. So we'll see. Leave your thoughts in comments below, and like and subscribe. See you soon.